I think the banks have a big problem. They're losing talent to crypto, so they're having to raise wages to attract talent. And they're losing business to DeFi, lending and saving. A lot of it is taking place in DeFi right now. Most of our investor base has been retail, but we have been cultivating institutional relationships for the past 3 to 5 years. We do have institutional investors, but so we have 2 conversations. For the retail investor who's been with us, who really does believe that we're onto something, that innovation is going to disrupt every sector out there, and they want to be on the right side of change, we have educated them. We have a 5-year investment time horizon. Everything we do, keep your eye on the prize, average down if you can, and usually that sort of disciplined behavior will work out over time. We often say time, not timing. In fact, one of our clients in Japan, Mizuho Fuke-san, that's his words. Those are his words. Time, not timing. And we have a chart now. If you held stocks instead of trading around them over time, you would have done much better than trying to time. So that's the retail base. So they're holders and they're averaging in. Institutions, in 2020, we had incredible performance. Innovation solves problems. COVID brought with it a lot of problems. And I think a lot of institutions looked at us like, what is this in terms of where does it fit into my matrix? And so we don't fit neatly into a matrix that any of these ratings agencies have or so forth.
Hello everyone and welcome to the Daily Crypto. We are back with another video and are joined by Cathie Wood, the founder of ARK Asset Management Company. She will reveal some of her company's future investing plans, which you can follow to profit off their analysis. Make sure to watch the full video because she will also share her price target for Bitcoin in the next 5 years. But before we can continue with the video, let's take a quick look at the Fear and Greed Index for today. As of recording this video, it is sitting at 30, down from yesterday's 31. This indicates that investors have started to fear that Bitcoin might drop down from here. At the moment, Bitcoin and Ethereum are trading for $20,380 and $1,574 respectively. With that out of the way, let's continue with the interview. Even though Cathie Wood's ARK Asset Management Company is mainly based on retail investors, she reveals that they are also building successful relationships with more prominent institutions too. The key to successful investing relies on holding on to your positions for long-term, rather than trying to time the market and have the perfect entry. If the need be, start dollar cost averaging because statistically, people are better off just holding their positions instead of trying to trade for small gains.
What I mean is when we saw the yield curve invert, and if you look at the 30-year to 2-year, it's a waterfall. It has come back a bit, steepened a little bit, partly because short rates have come down, which suggests to me that there are some people out there who might agree with us, who are saying, okay, the Fed, what's priced into the market right now is another 7 or 8 interest rate increases. That's priced in. And now they're saying we're going to be more aggressive than that. We'll go 50 basis points at a clip. We're going to get aggressive in terms of quantitative tightening, no longer quantitative easing. And so we're looking at consumer sentiment down at levels we have not seen since 08-09. Think about that. Record-breaking employment reports, record-breaking, unbelievably good. And yet the consumer is feeling terrible. 08, and no one's talking about this. You know, everyone who's saying, the economy's strong, no one's talking about a consumer sentiment. This is the University of Michigan Consumer Sentiment, suggesting that the consumer, which is 2/3 of our economy, is not happy and is actually depressed because their wage gains, income gains, are not keeping up with inflation. Their real income is dropping, and I think that the Fed has to watch out because we see auto sales coming back down, and everyone says, "Oh, that's supply chain." We see furniture stores, big disappointments. Restoration Hardware is a good example. one retail industry after another is saying, whoa, something's happening here.
While many analysts are saying that the economy has started to improve, Cathie has the opposite outlook on the macro conditions. Even though job numbers came out good, the consumers are still struggling to keep up with their lifestyles because of inflation. As a result, we have started to see more and more people defaulting on their payments, which will ultimately lead to a domino effect where millions of people will default, causing a market crash.
We've seen one supply shock after another. It went much further than I expected. I expected the supply chain bottlenecks after COVID to clear up in 6 months. It's been 2 years, all right? I didn't expect, we didn't expect Russia to invade Ukraine, which is the breadbasket of Europe. And it's the energy source for a lot of Europe. So those are two major shocks. I think Europe's in recession, and we can't think about the US in isolation. Europe's probably in recession. China is, if we're looking at the micro numbers, China's very weak, very, very weak. And so everything's riding on the US. So the supply shocks, I think, are hurting purchasing power, as I said, in the US, could cause a recession. That will unwind the supply chain bottlenecks pretty quickly. And I think a lot of what we're seeing right now is a function of supply chain and supply shocks, very cyclical as well. And I think we'll see the other side of that. And then, as you say, we're seeing powerful deflationary forces associated with technology. Artificial intelligence training costs alone, and this is going to involve every industry, are dropping, if you consider both hardware and software, 60% per year. That's just one example of the deflationary undercurrents in the global economy.
It has been 2 years since COVID struck, yet we haven't recovered from the supply chain issues, which has slowed down growth in the US. Cathie says she expected it to clear out after 6 months post-COVID, but here we are, still in the middle of a supply crisis. This could potentially push the economy into a deep recession, which will take a long time to recover.
A Bitcoin advocate, and we are, as you know. Well, many people hold Bitcoin as an inflation hedge. I've just given you a deflationary story.
Right.
If we're right and deflation does happen, all of those companies who did not invest enough in innovation but leveraged up to deliver short-term profits, they manufactured earnings with lower share counts and they paid dividends, they're going to be in harm's way. They'll have to, in order to service their debt, they'll have to lower prices. So that's a part of the deflationary undertow we see out there as well.
According to Cathie, institutions that aren't invested in innovation like Bitcoin will suffer in the near future when we see deflation take place. Since they use excessive leverage to make short-term gains, they will struggle to pay their debts in a deflationary environment.
Many people think monetary policies around the world have been unhinged, especially since 08-09. And they're seeing extreme increases in the monetary base, various monetary bases around the world. So Bitcoin is a hedge against inflation. Now, that will turn into inflation if the reserves on central bank balance sheets, which are the kindling for inflation, if they're lit. And that means if bank loans go crazy to the upside. We're seeing a share shift when it comes to loans into DeFi. So, there's a big, I think the banks have a big problem. They're losing talent to crypto, so they're having to raise wages to attract talent. And they're losing business to DeFi, lending and saving. A lot of it is taking place in DeFi right now.
As cryptocurrencies keep gaining popularity, banks are going to be heavily affected if they fail to adapt themselves according to the new needs of consumers. We are already seeing banks lose their most prized employees who are now joining the crypto sector, due to which they have been forced to increase wages. Moreover, they are directly losing business because of the rise of DeFi, as people have started to realize that they don't need third parties to handle their money.
We are assuming significant fee compression, both on the institutional and the retail side. So that's no surprise. It's baked into our model. What Coinbase for us is, it's a crypto asset play, and it's institutional and retail. So it could be a digital wallet. We're looking for who are the winners in the digital wallet space. Is it Cash App? Is it Coinbase? Is it Robinhood? And they're all in the running, and they're coming at it from different angles. And you've got the institutional side of crypto, and we believe that institutions, their go-to, the first is Coinbase. It's the most robust platform, and it's got the most liquidity on it. And so we think the scaling opportunities, given what we think is going to happen to Bitcoin. Now, as you may know, Bitcoin today is around $44,000 per Bitcoin. We see that scaling to $1 million by 2030 or more, for all kinds of reasons, not just store of value, not just the payments, what do you call those?
Cross-border payments?
Cross-border payments, but remittances,
Yeah.
not just that. But institutional investors, insurance policies that high net worth individuals take out so that their wealth won't be confiscated, like we're seeing more and more often these days, and a substitute for money in emerging markets where they can't trust their monetary regimes or their fiscal regimes. So we see an incredible number of use cases, and we think Bitcoin will be leading the charge in many of them.
As Bitcoin adoption continues to grow at a rapid pace, Cathie says exchanges and other crypto-related service providers will have to cut down on fees if they want to attract more users. This will be a very positive move as the barrier to entry and sustained interest will be lowered. Cathie also reveals that her ARK fund has a price target of over $1 million per Bitcoin. Thank you for watching this video. Make sure to hit the like button and subscribe to our channel because we upload informational videos on a daily basis which will transform your financial life. So stay tuned for the next video.